What's up, guys? It is showtime. So we are doing not only a live today, but also recording this for the podcast. So if you're tuning in live, we'll be monitoring some of the questions. If you want to drop something in there for myself or our guest, Kyle Wright, you want to make sure you drop those in. I'll be fielding them. And if you're listening to the recording, go ahead and comment. If you're on LinkedIn, that would be fantastic. Or if you listen to the podcast, make sure that you leave us a comment. If there's anything that we covered that hit home that you loved, or you have more questions, leave us a note there. We're going to jump right into it. Our guest today, Kyle Wright, actually a friend of mine that we've been getting to know each other, and you're going to want to tune in and grab a business the last 9 years originating. He's built up a very successful team. He's built a team not only that's endured the markets that we've seen over the last 10 years, but he's successful now and last year. And we know coming off 2023, if you just look at originations, majority of people were down 50% or more. You got companies going out of business. You got people making moves. You got all kind of stuff happening out there. So we want to bring Kyle on because I love to know what successful originators and branch managers and team leaders are doing today. I think you're probably going to want to know the same. So if you're in mortgage, real estate, you're in financial planning, any of that stuff, I think this will bid well for you today. So without further ado, we're going to bring you on. Kyle, welcome, my friend.
Thanks, Brian. Excited to be here.
How about, is this your first live? So I know we were talking about, you've done some podcasts, but it's first live?
So I did a live with Dave Savage, actually. I was at an event and he was like, hey, you should come over here. And then the next thing I know, he's like putting this thing on. He goes, we're going to go live right now. I'm like, oh, like right now. Not like
Oh, not in a few minutes.
We went live and it was terrible because he picked this spot. I mean, the video was fine, but he picked this spot and we were on top of an air conditioning unit behind the event that we were on, and the air conditioning unit turned on midway through the live. So it was pretty funny.
Technology. There's always stories to those, and I remember Dave did that when he was here in Nashville, and we happened to be at the Franklin factory, and we turned it on and all this stuff, and people are walking by and it's all this chaos, and you're like,
yeah,
I mean, that's just life, right? That's what we kind of do. So that tees up the chaos that we're all dealing with. So I want to know, and I think people probably want to know from you, how have you been faring and navigating the last, let's just call it year and a half almost, that the market has changed quite a bit, right? We could talk about all the factors, but it's changed, right? It's the most, and I would say, I hate to use the word difficult, but I'll just say challenging market in the sense of there's just a lot of ebbs and flows. Things are coming at us fast. Rates didn't do what we thought. We got all kind of things we could talk about. How are you navigating and attacking this market differently than maybe in the past?
So a couple different things that I'm doing different is I am diversifying. I know that a lot of coaches and people will talk about going in and finding something niche-y and being the best at being niche-y and all those things. But having already done that, now needing to find a way to continue to compete in this market, I've had to diversify. So in 2022, that was probably the toughest year that I've ever experienced. And 2023 was, I would almost say, even harder of a navigation for me as well. But the ways that I did it is I learned how to do non-QM loans. And it all really started for me back in 2020 when things started getting really crazy. People kept coming to me with these like ideas of like, oh, I want to do this. And I'm like, okay. And I'm not a guy that says no to anybody. So I was like, okay, well, let me look into it. Let me see what I can come up with. And so I actually started doing non-QM loans in 2020. And I started doing like lease land manufactured homes in 2020. And I started doing like second HELOCs and things like that, originating them in my own office. Most loan officers were referring that kind of stuff out. Construction loans, they were referring those things out. So I learned how to do all of those things in 2020. And when 2022 came around and it just was so expensive and rates are too high and you just couldn't find a way to get people qualified, lots of real estate agents started pushing their clients towards lease land manufactured homes. And I wouldn't say that this is a bulk of my business. Where I'm going with this is that you have to be a jack of all trades or you will get left behind in this market. And what I mean exactly by that is you always, when you're trying to get that real estate agent, they have a number one lender and you want to be their number two and you want to be their backup, and whatever that guy doesn't take, I'll take. But if you're the backup lender and you start taking 70 to 80% of all of the business because the first lender won't take it anymore, guess what? That first lender isn't first lender anymore. You're now the first lender. And I didn't want that to happen with me and any of my realtor partners. And so I diversified out into, construction loans, non-QM loans, and lease land manufactured homes. So when things were tough, it was Kyle's my guy for everything. It doesn't matter what it is. Kyle will take it. And that's really the keys to success right now is you got to know everything.
Mm-hmm. I love the fact that you got specific, right? So you're talking about non-QM, you're getting into some of the products and programs, and I look at it as you started to provide solutions, right? And a lot of people just think about, well, I'm just an order taker. And,
Yep.
and what I sense is like you're going on the offense, right? Versus, let's just call it what it is. We had a few years that we were just taking in orders and we're just taking in whatever came at us, and you could basically get anybody qualified. Everybody was able to refinance. Everybody was able to buy a second home investment property. And now you're providing solutions. Walk us through how you went about learning those, right? Because I think there's a lot of originators out there, they hear this and they're like, oh yeah, I do non-QM. But do they really understand the product depth and how to then provide solutions for what I believe are real problems out there that people don't know what's out there? They're not aware of like even how to structure some of the deals they'd like to do. So how did you start to learn that and become that jack of all trades in the sense of learning these new programs?
Yeah. Well, it was my first deal. It was, everyone gets hit up with self-employment, bank statement, right? So that was one of my first deals, was a bank statement program. I actually did my first bank statement program in 2018. I just didn't do very many of them because most people, you learn something very well, right? So I learned FHA well, I learned conventional well, I learned that you could have 1 year on the business, and as long as you had history in the line of work. Well, what does that even mean, right? Like, what does history in the line of work mean? Just because you're going from one industry to another industry doesn't mean there's not crossover. You just got to get a good enough letter to find the crossover, right?
That's right.
So I ended up talking most people out of bank statement programs and out of DSCR loans until I really learned how to do them. And then once I learned how to do them, I'm like, why would I ever talk you out of these? Like, I don't know why I used to do that, but like I used to do that. I used to talk them out of bank statement loans and out of DSCR loans. And so when I got hit up really big was in 2020, when people wanting to pay over asking and the rates were so low that any property would DSCR, like any property would ratio and you could qualify. So what I did is I found 2 or 3 different investors and learned their guidelines. And if you've watched any videos from me before, I advocate for learning your guidelines because you are the master of your ship, and that loan is your little ship that you're trying to get from one side of the world to the other side. And if you can't captain that ship well enough, it's going to die in the storm, because there's storms the whole way through. It doesn't matter how perfect your file you think it is at the beginning, something happens along the way and it ends up not being a perfect file. And so if you're not a very good captain and you don't know the waters well along the way, then you're going to sink and drown. And so you got to learn the guidelines. I mean, that's as simple as it is. And you can't just go with one DSCR platform or one DSCR program. You got to know 2 or 3, because something might happen. You might get down the way a little bit and go, crap, I can't go with that one because there's this little nuance that we didn't know about. Got to flip it to a different one. So I went ahead and I learned 3 different DSCR investors, their guidelines. So when I was on the phone with a client, I can be like, I know how to do that. I can do this. Let's make that happen. And so that, really knowing your guidelines, like I said, I've spoken before on this, but you have to know your guidelines.
Yeah.
Period. And if you don't know your guidelines, you will not be able to continue forward and get things completed, really.
I love that. And I love the analogy you gave. We had a comment on LinkedIn about that, is being the captain of your ship. And a lot of people don't think about that. We've heard, be the quarterback, but being the captain of your ship and making sure that everything that's there, potential problems that could arise, the guidelines so well that you've had a conversation with your customer and you go, hey, we're going to go this way because if we go the other way, we're going to have some problems. We can't document this. Right. And you go that way. let's shift a little bit, because I think that gives people enough ammo, right? On like, okay, you learned your guidelines, you've got multiple investors, you understand the programs. I mean, let's talk about this. This is where I think a lot of originators struggle today. You got this whole thing of, do I go direct to consumer? Do I go to realtors? Do I go to financial planners? Like, where they get their business? How do you market yourself now that you've become a subject matter expert? You know these programs can help. You know those people you want to help. How does Kyle then go out there and market yourself in these programs?
So one of the biggest things, I guess one of the biggest things that I'm doing right now is there's not enough loans in the market. I mean, realistically, there's just not a lot of loans. And so how do I make sure that I'm staying on top of getting a good capture rate with my referral partners? Something that I do is I go visit them and I make phone calls. And I'll give you an example. This was just 2 weeks ago. I called up one of my best referral sources, and she works down in Tucson. And I'm like, hey, how's it going? And she's like, oh, it's going great. And I said to her, I said, hey, I want to be on every deal I possibly can. And I want to do the best that I can for you and your team. What do you got going on right now that maybe you're struggling with, or you can't find a way to get this client under a contract, or because the other lender's not being responsive, or he's not offering enough programs, or what do you got? Like, what do you got going on right now that I'm not on, that I could, maybe see what I can do? And she goes, oh my gosh, I'm so glad you called. Like, just like that, right? And I'm like, okay. She goes, I have a contract right now that is going sideways, and he's like trying to call 4 other lenders to see if they can get the deal done. And I'm here going, wait a minute. Like, you're one of my good referral partners. If I hadn't called you, would you have called me? And the truth is, right now, they're just trying to hold on to every deal that they can.
Mm-hmm.
It is like feast or famine out there right now. And so they're just trying to hold on to it. And I don't think that agents are pushing nearly as hard as they were before for referral partners, because they're worried about losing deals also. And so they're just not pushing as hard as they used to. So how do you overcome that? You got to be on top of your game, and like, you got to know your stuff. So that way, when you call and they tell you the problem that they have, you have the solution on the phone, and then go, oh my gosh, can I like 3-way Chris in real fast so you can tell him that? Sure enough, I told her the solution. She called Chris. Chris answers the phone. He tells me the solution. He tell me what, the problem that's going on. And I said, Chris, I can fix your problem, and I can give you the exact solution of how to make this work. He goes, you can? I said, absolutely. But I want you to commit to me that if I give you this solution and I solve your problem, you're going to go with me. Because I can tell you the solution, and all you got to do is call your other loan officer that you're working with and just tell him what I said, and he can fix it too.
Yeah.
But like, that wouldn't be really fair to me that I, find a solution to your problem. And he's like, Kyle, if you can fix this, I'm all yours. Well, we close tomorrow.
That's awesome.
So you got to do stuff like that. I walk in the bullpen with the real estate agents. I'm like, hey, what do you got going on? What can I help with? Oh, I've got this buyer, and I'm not able to get concessions. Cool. Why don't we do a down payment assistance loan, so that way they can get the closing costs covered and they have their own down? Oh, I didn't know you. I thought you could only do that for down payment. Well, no, you can. It's money. You can use it for closing costs, down payment, all these things. And it's funny because loan officers, we send out these videos and these emails and the text messages of like product updates and things like that. The agents don't read them.
No.
They read the catchy little, subject line, and they send it to you from some other lender. Go, oh my gosh, can you do this too? It's like, yeah, I've sent you 4 videos and 4 emails on that same exact program. I'm glad that you read theirs, but not read mine. But they don't read what you send them. And so you have to be constantly working on that in order for them to really stay top of mind.
Man, I love that. And you went back to some basics. We were talking to one of our teams yesterday, and they're like, hey, Brian, we're doing well, but we would like to do better. We're struggling. We meet with agents or financial planners, and we get warm, but then they forget about us, just like what you shared. And I'm glad you shared that, because too often we think, well, they know us, they like us, they trust us, these things we've heard in the past. But the reality is, we need to be aggressively reaching out. To your point, I hear this more often today And it's the difference. I think it's the separator between people that are closing double digits in loans and those that are like, man, I don't even have a loan or two most months, right? And they're struggling. The fact that you're doing the production you're doing and you're still calling agents is just a reminder of being in front, top of mind. And I've seen this year. I don't know. I'd love your take. I've seen this year. There's this separation of there are lenders that people end up with, they start with, and they're fumbling because they don't have the products, right? Like that we have. And you're able to come in there. So what advice would you give that loan officer? Do you have a cadence of like, you reach out to your agents a certain day? You know, I know you go and show up and you jump in the bullpen with them. Like what would be some of that kind of just as you look at your maybe routine or habits during the week that you would say, this is what you should do?
Yeah. So typically I like to reach out to my best referral partners, the ones that, send me the most referral business, and then their team. I like to reach out to them once every other week. So I like to hit them in that time frame. So that could be a text message like, "Hey buddy," just, some of the ones I have like the better relationships with, it might just be a text message.
Yeah.
The ones that are like the second tier where like you have a good relationship, but like you don't see them all that often, but you know that they send you enough deals. Those are the ones that I make phone calls to. So I categorize them like these are the text ones, these are the phone call ones, these are the I'm going to show up to your monthly meeting and meet with all your agents who don't send me business because face to face is going to be a better opportunity for me to get that business. So I, categorize them out, and then I hit my best referral partners with a text message. The second tier referral partners, I usually use a phone call every other week where it's just like, "Hey, how's things going? Just want to see what's going on. How can I help?" And usually it's like, "Oh man, I'm struggling to get a deal right now." And there's not a lot, but just like that phone call last week, or a week and a half ago, it was 2 Fridays ago. That I made the phone call, and she was like, "Oh my gosh, I'm glad you called." It ended up being a $600,000 transaction that they were trying to go VA/FHA with. Well, in my market, the FHA was only 490, so they have to put down $100,000.
Wow.
All I did was switch it to conventional 5%, and they only ended up putting down 30 grand. So, I solved a massive solution for them. But again, I've called her, 7, 8 times this year, based on the every other week thing. Did never get a deal until that one call. But
Yeah.
that's okay because that's one situation. I can do that situation with almost every one of my referral partners. Once a year, I will call them, and they will be in the middle of a horrible transaction, and I can call and give them a solution, and then I end up getting the deal. So second tier is usually a phone call, and then my third tier is you just gotta show up. You just gotta show up in their bullpen, walk around, be like, "Hey Brian, how's things going today? What do you got going on?" And then they tell you. And
Mhm.
most of the time you have to be sincere about it. You can't just be like, "Oh, I'm here to get on a deal," but like everyone knows I'm there to get a deal. But I
Yeah.
ask them and I say, "Hey, what do you got going on?" "Well, what if you did it this way?" And then I start saying how to do the solutions to them without saying, "Let me talk to your client." And then after I've given them 5 or 6 solutions on how to get the deal done, they go, "Man, I wish they would have just used you." I said, "Well, why don't you call them and ask them?"
Yeah.
And some of them, I'll be like, "Call him right now." And she'd be like, "Hey, my lender's in the office and he gave me the perfect solution to get your deal done. Are you willing to chat with him? He's right here." And I've had them call and hand the phone over, and I've taken an application over the phone, and we're off to the races. But you have to be doing that kind of stuff. Like you have to. You can't be
Yeah.
lazy right now. You cannot be lazy.
Yeah. Well, let's talk about that because I hear this and there's a lot of call reluctance. There's people that the psychology of it, like they're just afraid to make these calls. They're fearful, whatever. Could be lazy, right? Could be these things. How do you motivate yourself to put yourself in these situations? Basically, I say every day you're going into battle, right? Like people are going to say no. People aren't going to call you back. You're going to get turned down on stuff. You know what I mean? Like life happens. How do you motivate yourself to show up every day and stay in the fight?
It is super hard to stay motivated. I will say that even to this day, there's some days I have call reluctance. And it's just part of the thing. You can never be always motivated. It's just not possible. There's days I wake up and I'm like, "I don't want to do it. I don't even want to show up to the office today." And then there's days I show up and I'm like, I've got a list of 10 things. I want you to add 10 things. I'm going to crank out 20 today. But it's really hard to stay motivated. And so I actually work. So my bullpen's just outside my office, and I have the girls in the office. Sometimes they'll tease me. They're like, "Are you making phone calls?" And I'm like, Yes, I am." And sometimes I'll be like, well, I have these, and I'll give them a list, especially on days that I'm not necessarily feeling motivated. They don't always know that it's not the day I'm feeling motivated. I'll tell them like, man, I gotta call this person, I gotta call this person. Can you remind me to call those people?
Yeah.
And it's just something I do that like is kind of like a game with myself, right? Where if you're telling yourself to do something, there's a good chance you won't do it, especially if you're having some kind of reluctance. But if someone is like sitting there going, "Did you make that phone call yet?" It's like,
Yeah.
now you're accountable to somebody that so especially on days where I don't feel motivated, I'll just bounce off the team and be like, man, I got these 6 phone calls I got to make today. I'm not super jazzed about it, but I got to make these 6 phone calls today. And then they'll sit there and I'll be working, and then it'll be quiet for a little bit because I'm doing some on the computer. And Jennifer will go, "Did you make that phone call?"
Mm.
"No, but I'm going to right now." So sometimes I put a little game into it, but you can't always be motivated.
Yeah.
But as far as like my schedule and things go, usually I time block schedule like phone calls like that I
Mhm.
need to be making. So usually what I'll do is I will schedule phone calls in the morning starting around 7:45 to about 9 a.m. with people that need to review numbers, or they want to take applications, or whatever it might be, that have like pushed me off. So I'll set those appointments for that time. Then I'll get to the office, I'll do some office, check through my emails. Aaron's got me a list every single morning of the hot emails that need to be addressed. I address those emails. And then I usually watch a little bit of MBS Highway, get the morning brief so I know what I'm doing. And then I go right into reviewing loans and sending out pre-calls for the next couple hours. After that, it's usually problem solving, which then is more phone calls to people to go over problems that they have on their loans. And then I usually wrap up the day with more application phone calls, usually between the hours of like 3:30 and about 8:30 at night.
I love
So
that
that's
schedule.
typically.
Eh, Well, I'm glad you broke it down that way. And the fact that you talked about the motivation, I thought about this happened to me literally yesterday. I told my wife, I said, okay, I'm picking up my running. And I'm in between calls yesterday, and I had this little block that I said I was going to go run because I had like 30 minutes, right? I'm like, I'm going to go run these 3 miles and whatever. It's just, well, why haven't you left yet? Like you said you were going to go do that. And I'm like, well, I got this call coming up, and, and so you can run that 3 miles in 30 minutes, like go. It's almost like having people around you that you've
Yep.
shared these goals with and things. And when they say
Yep.
that to you, I don't know about you, but it was one of those moments where I'm like, I need to go do this.
Yeah.
Because, I mean, to your point, I love that you shared this. Is like, there's a lot of times we can let ourselves off easier. If someone else says, hey, Kyle, did you make those calls? Hey, have you followed up with so and so? Hey, did you do
Yeah.
this? And you're like, man, that's my team. And I know for me,
Yep.
like people I support, especially like my wife and like both of us being married, it's like, when I said I was going to go do this, whatever it is, let's
Yep.
go do it. It's never as bad as we thought it would
It
be.
it's never as bad as you think it's going to
Oh,
be. And it really isn't. I mean, I would tell you that greater than 70% of the phone calls that I'm on, they end up really well. Like we're
yeah.
laughing and joking at the end, even though like it did not start that way. I had one lady that was cussing and swearing at me for about 15 minutes, and at the end we were swapping jokes. And I've had some that hang up on me, and it is what it is. I mean, that's just part of the game, and I've learned not to get my feelings hurt, because you just can't. Most of the time you're the punching bag all the way through. Something I tell my clients, and this helps with call reluctance. I will tell you that if you set this precedence up front with your clients, you'll be less reluctant to call them with bad news. I'll give you my exact script. This is exactly as I say it every time. Hey, buying a house is hard. It's stressful, it's complicated, and your deal might be the easiest deal possible, but there will be things that will come up that will inhibit you or make you frustrated, or that won't go super smooth. And that's okay. And it's okay to freak out about them. I, Kyle, have emotionally prepared for myself for you to freak out on me 6 to 10 times during the transaction. If we get to 11, we might need to call a professional. And that's where I throw like a little bit of joke in it. And then usually people are like, oh, I wouldn't do that. I'm like, because you said that, you will be the one that calls me freaking out. And then I give
Yes.
them a couple of examples of like why people freak out. I'm like, at the end of the day, that little statement makes it to when you call them, it's like, hey, I gotta talk to you. Like, this is that freak out moment, right? Where we're gonna freak out, but I got solutions for you. So I give that to every client at the call when I say, hey, you're pre-qualified. Here's your pre-qual. Go out and find a house. Buying a house is stressful. This is what to anticipate. And sometimes there's no freakouts, and sometimes there are freakouts. And I tell my clients it's okay to do it. And they call me like, Kyle, I need to catch in one of those freakouts. And it makes it like more fun
Yeah.
for that. Because you set the stage. I mean, I don't know about you, but not every deal is smooth. And they're really tough and difficult. And so if you set that stage up front, you're taking your call reluctance and lowering it because you already set the stage that it's going to be tough conversations along the way.
Yeah, I love, I use something similar when people join our team in the first 90 days. I'm like, you're going to have moments that you're frustrated. Things don't work the way you want. You've left a place that you knew everything and knew everybody and like everything was working. And you've entered this new world where you're like, I don't know this. Hey, where do I go for that? Who do I call for this? And it's okay. I said, just call. And it's funny because before our call, I had somebody text me and go, hey, I need 10 or 15 minutes today. And I know it's going to be one of those moments a month into joining. They're like, maybe they're going to celebrate a win, but I'm prepared for the fact that they may just want to call and say, you know what? Hey, I don't know what to do about that. How do I do this? How do I do that? And I love that you set it up ahead of time and make it so that it's okay. And as much as I would love, like you and I are in the business, and I know a few years ago when we were buying a property in Orlando, I remember the loan officer calling. He's like, hey, I know you know the business, but this is what's happened. This is what we need to do and all this stuff. And you can freak out or I can just tell you the solution, And I remember up front, we had this conversation of, I don't want all the details. Like, tell me the problem, give me the solution, and I'll make a decision, right? Like that's how we're going to communicate. And they delivered that. And so I love that you already have this and that's setting the service standard. I want to take it one step further. What do you do today? Because I do think service matters. It gets overlooked. Everybody, we've talked about products and programs. We've talked about how to get leads, how to follow up, how to stay motivated when we're not, and all that. What are you doing really to differentiate yourself, whether it be service or just in the marketplace? Because look, let's call it what it is. Like market share right now has become what we're all fighting for because there's only so many loans being done. We're all fighting for the same ones. How are you differentiating yourself as you go forward in this market that, rates have stayed pretty much the same? We're all fighting for a few customers in our market that we're all after.
Yeah, I mean, one of the biggest ways I've done that is, I guess one of the biggest ways I've differentiated myself is by being diversified. I can be the source for my agents to do every loan. So that way they don't have to like figure out what to do and where to go. Like I can just be the guy that does everything that they need me to do. So there's that. I've had to reduce margin to stay competitive. I mean, that's the ugliest
Reality.
truth of this entire, people are like, oh, well, I'm not competitive. Lower your margin. Like be okay making less money. I mean, if you went and looked at the margins that I made on all the deals I made, it's significantly lower than in previous years. And it's significantly lower because I didn't want to lose deals, period. I don't like losing deals. Like that's like it hurts. Like it hurts me inside to lose something. And so I'll fight tooth and nail, which is what my underwriters will tell you also when it gets to underwriting is that I fight tooth and nail to make sure a deal closes. Because if I put a pre-qual on something, I'm telling you I'm going to close your loan.
Yeah.
And that's, with my realtor partners, that is like a big thing is I've used my current relationships that show my authenticity, that show my, I guess, tenacity to get deals done. And I've leveraged those relationships with new relationships to help show what I can do. So like I've got a realtor partner that is out right now. He got me a meeting with a new team and I brought him to the meeting. And I think I said 10 words. And I left shaking the hand of the new team lead, going, okay, it's going to be great to do business with you. And I think I said 10 words the entire lunch. We were there for an hour. I mean, the other guy did the whole thing for me. So, you know, you really you've got to be able to be good. I mean, at the end of the day, what we're seeing right now is the good are doing okay. Like the really good loan officers are doing okay. The mediocre loan officers, you're not going to make it. And you don't have to be mediocre at all, like at all. Like you used to be able to survive in this market previously when rates were low and things like that. But now you have to be either really good or you have to be really cheap. There is no in between. And so I pride myself on being the best. And so that's kind of the push that I do with my agents is like I will get every solution, and if I give you a pre-qual, it will close.
Yeah.
And that's really the biggest value add that I, sell my agents on. And I guess it goes down to your point of service level, right? This is really just the service level because I'll never be the cheapest, and nobody can be the cheapest because
Yeah.
you're going to find that one weird wonky bank out in Delaware that's going to do the deal for, $500 cheaper than even you're going to do it for free, basically. So you can't ever win the race to the bottom. But sometimes what I'll tell my clients too, I like to set the stage a lot with my clients and with my realtor partners. For example, that previous thing I said with the freak out moment, right? And I do that one because I want to set the stage for hard conversations. But two, and this is a very important piece of it, I set the stage that it's okay that things are going to go wrong and that they want to call me. Because what happens is you get under contract with someone and you don't tell them it's okay to call you freaking out because the numbers look weird. Oh, I know you're going to add these two numbers on the loan estimate. It's going to make your payment look like it's $400 more, but it's not. You tell your clients it's okay to call you and freak out on that. If you don't tell them it's okay to do that, who are they calling? Their mom, their brother, their sister, their uncle, the previous loan officer that helped them before, right? And then you're now playing from behind in a defensive position instead of being on the offense. And you're going to lose those deals because they're going to trust their mom and go, oh, it wasn't like that for mine. That guy doesn't know what he's doing. Call this guy. And by the time you get your notification saying their credit's been checked, they've already had an hour-long conversation where they told the other loan officer exactly what the problem was with you. And he went, oh, it's no big deal, even though it's exactly the same problem with him. But he navigated it differently. Same thing with when I'm talking to clients about, quality and cost. And I cannot remember who said this to save my life, but there's three things you can have. You can have it fast, you can have it good, and you can have it cheap.
Yeah.
But you can only have two of the three. You cannot have all three. So you got to pick which one you want. You want it fast and you want it cheap. You're not going to like me during the transaction. It's not going to be great service. You want great service and you want cheap, it's going to be slow.
Yeah.
If you want it to be fast and you want great service, it ain't going to be cheap.
Yeah.
So, I mean, and I tell people that all the time, when we're discussing costs and things like that, I give them the examples. Here's your examples. You get to pick two. You can't have three. It's not possible.
Yeah. Yeah. We've seen it. And I've heard it said, Brad Lee has said it before. And I remember Brad sharing it and he went through examples, and we actually shared this and people start to realize like, which two do you actually really want? And you make that decision. It helps you through. And I love how you're setting expectations. You're clear on who you want to work with. And I always say this is like, what do you want to be known for in your market? Do you want to be known for the two of the three? Which one are you the best at? And I would say in our industry right now, I know myself, I never look for the cheapest in the mortgage transaction, even as an originator, because I know cheap is going to deliver problems, and problems are time and money and things that I never get back. I don't get the right advice. The service level is going to be stinky. And I'm like, I'm willing to pay for better service, better advice, and to get the actual, what I would say, end goal in mind, right? Without all the headaches. Some people, look, they're just willing to shop online all day and they're going to go for cheap, 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 cheap. And they wonder why they can't get a loan officer on the phone. They wonder why they weren't given the best solution. They weren't presented all of the options that we talked about today. And they wonder why somebody's not there to guide them through, like you talked about. Well, you chose your path, right? And so
yeah,
I love that you're clear on this. Well,
yeah.
Go ahead.
I was just going to say that online right now with online leads and, social media, the biggest push is you need to shop for the cheapest mortgage. And like, I get we all want it to be cheaper, but cheaper is not always better, you know, and not every client needs it. Like, for instance, that client that I'm doing that loan for that I got from the lady in Tucson, when he compared my loan estimate to the other loan estimate that he was getting, the difference in costs was about $15,000 in costs, not down payment, but costs. Because the other one was doing an FHA loan, charging him 2 points plus the upfront origination or the upfront mortgage insurance premium, right? So it's 15 grand more than what mine was. But he goes, Kyle, but their rate is 0.75 lower. And I said, that's okay, because this loan is a 6-month to 1 year time frame for you. You're going to sell your house in Ohio and pay this off in full in 9 months from now. So why would you spend $15,000 to pay it off in 6 months from now? You should just go ahead and take the higher rate at the cheaper cost. And he goes, man, Kyle, that makes so much sense. I'm like, I know it does. Like, I know it makes so much sense. Cheaper is like the lower is not always better. The lower rate is not always better. And so that was the one huge win I had, but you have to educate them on the phone about it. And if you don't present them with the options, they will just try to go with the cheapest.
That's right. That's right. You do that. Well, friend, this has been an incredible conversation, and I know people are going to want to listen to this. There's a ton of notes that I was even making over here. I can't wait to listen back. Thank you for investing time here and just sharing like how you break down, how you do business today, how you're attacking the market, all the things. They're actionable, right? Like I listen to this and go, and people should listen to this no matter what level you're at in this game. You should listen to this and go implement some of the things that Kyle shared, and your business will grow. I always say is like right now, there is very few people doing what you talked about and just daily showing up and attacking their day.
Yeah. Yeah. And I think that, one of the biggest things, I'll just do like a really quick story. I did a top producer panel, and one of these loan officers came up to me, and I've shared this story a bunch of times, but it's really the true key to all of this is, yes, you got to know your guidelines, and yes, you got to make your phone calls, and yes, you got to do this. But he kept asking me, what's the secret sauce? Because I kept saying like, oh, well, you got to know your guidelines, and you got to do this. And like, you need to be good at your job before you can tell other people that you're good at your job. Right. And he's like, yeah, but I want to know the secret sauce. You're giving me the surface level, which if you really dive into what I said this whole time, you could say it's surface level, but it's not really surface level. I mean, we went exactly what I do, and people forget to do those things exactly. So he goes, what's the secret sauce? I'm like, he goes, what did you really do to become a top producer? I said, okay, if you really want to know, I woke up every single morning and I went to the gym and I ate my breakfast and I started making phone calls at 8 a.m. in the morning. And I didn't stop making phone calls until 6 o'clock at night when I did dinner and put my kids to bed. After I put my kids to bed, I hopped on the phone from 8 o'clock every night until 10:30 every single night for 2 years. I made more phone calls than most loan officers do in a 10-year period, and I did it in 2 years.
That's right.
I made 200 calls plus per day, manual dials every single day for 2 years. And at the end of the day, Mark Cuban said it. You have to be willing to outwork and outlearn your competition.
That's right.
If you're not willing to make 10 more phone calls than me, then I will be more successful than you. I will outpace you and I will outwork you. And that's what it really comes down to. Like, diving down deep is you just got to work hard. I mean, you will not become a top producer trying to live an ultra balanced life and trying to only make, 20 or 30 phone calls. I can do a day now where I only make 20 or 30 outbound phone calls, but I inbound 100 calls every single day because of the work I put in 5-6 years ago.
That's right.
So, you have to live imbalanced to live balanced at a time frame.
Yeah. We've been there. It's funny. People ask me the similar thing, I'm like 2 decades of doing this. I'm like, I can point to seasons, and my wife would attest to this, points and seasons where like I was literally so out of balance, obsessed, and just like I had the goal and I made the calls. I did the trips. I did all the events. I did all of the things. I call it build your machine, to where the machine now has more coming in, and I'm not required to make as many outbound, but there are times even now, Kyle, like where I'm like, hey, we need to pick this up. The pace needs to be picked up.
Yeah.
And you know how to do it. The good thing is it's like a muscle. You just dive back in. You're like, cool, I need to make more calls today. I'm going to
Yeah.
go do that. Right. And we do it. So I'm glad you shared that. We could jam on it. Dude, thank you for taking time out. This was really fun. I love just getting to hear some more of your story
Yeah.
and share this with people, because we need more of this truth in what we're actually going through today. Because my goal, my mission is always, I'm going to provide you with real, truthful information to help you navigate. And now it's up to you, the listeners, everybody listening in. We had some people, commenting in. What are you going to do with it? Right. And if you do take action, please let us know. As I always love to hear the success stories and people that actually do take action, because it is a small percentage, and I'm aware of that. But the small percentage, that's who we're here for. We want to help people level up. So, Kyle, we'll
Yeah.
put your information in there. If you're following on LinkedIn Live, make sure you guys follow Kyle and follow up with him. And if you're listening to the podcast, drop us a comment, like, and subscribe, all that fun stuff. And Kyle, until then, my friend, keep doing what you're doing, and can't wait to follow along your journey and see what you do next.
Okay. Thanks, Brian. Appreciate it.
Okay. Thanks, my friend.